Let's get a move on and connect with the management of Bajaj Electricals, Mr. Anuj Poddar, the Executive Director, to get a view as to what the outlook is with the rebound in the business and how we're seeing commodity costs as well affecting demand. Good to have you on board. Thanks so much for joining in. Now, Morgan Stanley is saying that the company's approach to turn around the FMEG business and reducing focus on the projects business is going to be a key catalyst for growth for Bajaj Electricals. Can you share your views on the same?
Sure, thank you, and thank you for having me. What I want to do is separate our long-term story from, the short-term challenges that we're seeing in the economy. I think the short-term challenges we all know about, and I'm happy to talk about that later. But I think, as management, our focus clearly is on what our long-term strategic path that we've laid out for ourselves. Yeah? And that, in some extent, is what Morgan Stanley or other analyst reports also, in some sense, have referred to. We are on our own journey. We did have some legacy issues a couple of years ago. Gladly, we've been putting them behind us one by one. We are today in a much stronger footing at a balance sheet and performance level as a company, and more importantly, as a business model that we are in. We are very focused on continuing to stay the course on that. We know, last year, due to the pandemic, we had a bad quarter. I think this year, again, this is a sense of deja vu. We'll probably look at a bad quarter because of external factors, but we don't want to let that distract us from what our long-term steps are really, and that's what we want to stay focused on. So. Yeah.
Okay, fair enough. Going forward, the company has also been taking a lot of steps in order to revive this part of the business. So let's talk numbers. What kind of revenue growth, what kind of margin targets do you have for the FMEG business over the next few years?
So, we don't put out absolute numbers, but clearly as management, we want to measure ourselves against normal industry benchmarks. For the last couple of quarters, almost 7 out of 8 quarters, we managed to beat average industry growth. We hope over the next 2-3 years, we should be able to maintain that trend. So that's really where we want to maintain ourselves or benchmark ourselves against. And on the margin front, we've been very transparent in saying that our margins have been suboptimal. We do intend to expand those margins, but that expansion will happen in a gradual, calibrated manner, because as we start, correcting the steps that were deflating the margin, but we are also investing for growth for the future. So, short of absolute sharp cost cuts, which would lead to very strong margin expansions, I don't think that's a healthy way when you're looking at growth. So we do need to calibrate and balance our need to invest in the future into cost heads that will drive growth for us. But at the same time, over the next couple of years, we're very committed to delivering margin expansion.
Right. When we talk about margin expansion, what are the levers? Is premiumization probably the only way, or you would also look at a lot of cost measures?
So I think, thematically, we're trying to move away from inefficient costs or overheads and be very judicious on those costs, and that's, expanding margins. But putting in more money really into product and brand, because, as a company, as an FMCG business, that's the 2 key assets we build for the future. So we will not shy away from investing in our product pipelines and in nurturing and sustaining our brand. But we intend to self-fund that, so we will not do that in a manner that it takes away from the bottom line. So any other expense to my mind is, I wouldn't say unproductive, but lesser productive, and therefore that's where we'll be very focused on cutting those costs down. And we've shown that over the last couple of years, our ability to do that. Yeah.
So when we talk about products that Bajaj Electricals offers in the market, especially the new ones in the home appliances space, one would say that your pricing is quite efficient versus some of the other players. So do you plan to, get it at par with others, or to increase the margins, or, you continue to be focused at a, value for money brand and the new launches that you've done in various home appliances segment, or it's just an initial offer which you're getting to gain market share?
So if you look at our, general, I call it center of gravity of our TG positioning, it is very much a value for money positioning that we have, because that's where I think the scales in India exist. So at no point are we going to stray or move away from making sure that we have the scales or the, just the large part of the market on our side, and that we're able to target them. Having said that, our need to move up is a given. So we are looking at, and we have consistently been doing that, expanding our product portfolio, such that we have a broader breadth of products that you offer up and below that medium point, right? and we have been doing that in certain categories. We shall continue to do that. But I only want to caveat that saying that is not to move away from the center of gravity. So the median was very strong, and we were very narrow range bound above and below that median. We do need to extend that range, but not lose sight of the fact that the real opportunity and scale will sit in the middle India.
What about, Anuj, the conundrum of the raw material prices? They've been on a rise over the past few months. To what extent can the company absorb these price hikes without it impacting demand or even passing them on?
Well, that's true. I think right since last September, October, raw material, all commodity prices have been going up, consistently. We've not got our breath on that in the sense we're not seeing any slowdown of that. I think we have another few months at least where this impact will continue to be adverse for all of us, and not just us as a company or industry, but many industries. I think we just have to learn to take that in our stride. We took a price hike in January. We've just announced another price hike this May. Given the magnitude of the cost side impact and the increase in commodity prices, I don't think we're in a position to pass on the entire price impact to consumers, particularly in a situation where we are currently, and that's true for everybody in the industry. So I think we do need to balance out. We're balancing out the timing and the magnitude of price hikes that we pass on to consumers. We've already seen in some of the results that are already announced in Q4 that there is some impact in margins. I think that's true for everybody. That said, again, I don't lose sleep on, some of these short-term measures. I put them as short-term things. We have to tactically deal with them. But I think the long-term is a different story. So that's why I, rather focus my energies on it. And we'll just learn to take these in our stride over the next couple of quarters till the cycle hopefully starts reversing out there.
Also, given the fact that we have seen this continued second wave, have you reduced your production like some of your peers?
Yes, so I think the second wave, it's grown in intensity. The good news was that this time the lockdowns did not lock down production facilities or transport and warehouse, and therefore through most of April we had our factories on. Even now, technically the factories are on. But increasingly, since the sales or the marketplaces were shut, our ability to sell our production in the marketplace has been diminishing. And therefore, while we've not shut our factories, I think the production levels have come down and the number of shifts have come down. And it's partly because you do have some workers that are affected, attendance levels are down. But in the last couple of weeks, we've actively or proactively started reducing our production output till we see an uptake on sales, until the marketplace is open. And I'm hopeful that, by May end, you should start seeing at least some of the states or some of the districts start to open the lockdowns or, allow the markets to function and see a sales and demand uptake begin once again. Yeah.
Just what the markets is doing, but second, of course, is a lot of people this time are impacted by hospitalization, the cost that they are paying. Most of the people in and around their family are paying 2, 3, 4, 5 lakhs because of COVID-related issues or some stocking up. Do you think that will have an impact on the pent-up demand or recovery in the pent-up demand, or it will not matter over the next 6-7 months?
So, I think we have to be realistic, Nikunj, and, we do operate in a society that is badly impacted, right? I think numbers aside, the humanitarian impact of this is much worse this time. For everybody, you can feel that COVID has come much closer home. We have far more stories of families and people that everybody knows are impacted. That has, one, an emotional or sentimental impact on people, on the sentiment of demand. And secondly, it's second year in a running, so the savings do get impacted. It happens twice in 2 years, right? So I think as responsible management, we have to be very cognizant of that is an underlying sentiment or a trend that we have to be braced to deal with. What the actual impact of that on demand will be when the markets open, I cannot quantify, but we have to be prepared for that. I think the only good news there is our ability on the supply side this time is much stronger. So last time you had a very sharp rally of demand when markets opened up, but supply could not keep pace with that because the supply chains were badly impacted last time. This time, fortunately, supply chains are not that badly impacted. So let's see what the uptake on demand would be, but our ability to cater to that demand will be much better this time. So hopefully something should balance out there.